In this video, we're gonna talk about a REIT. What if you were not able to buy during the IPO? What if you are buying the stock a bit higher? How does it impact your dividends? Is it still a good long-term investment now that the stock price has gone higher? What should you do if you are a long-term dividend investor? If you want to know more about a REIT, dividend investing, and REITs in general, then you have to check this video out. Hi everyone, so for this video, we're gonna do a deep dive on a REIT. We're gonna talk about it. We're gonna talk about the technicals in the end. We're gonna talk about the impact of the dividends, especially for those who bought at IPO versus the ones who bought after the IPO, and for the ones who bought while it was consolidating. Then lastly, what is the impact if you bought it during the breakout, especially if the stock is massively higher? So this question, by the way, was sent by one of our YouTube subscribers, Teddy Ronald Garcia from Makati City. So Teddy is asking, "Hi Sir Marvin, first of all, thank you for your videos. I'm a big fan. I'm a senior manager for an IT company and I have been working for 20 years straight already. Though I have been blessed to be in a very good industry with a lot of growth, good benefits, and a very high compensation package, I was not able to save money for the first 19 years of my life. I stumbled across your videos last year and it dramatically changed my perception of money. Because of you, I have been a big fan of dividends and I have been accumulating PLDT and Globe, putting 35% of my salary and my whole bonuses to buy those stocks. I do not care about the stock price falling because I am just in it for the dividends and I have a stable source of income. My question, sir, is this. REITs are new to me and I was not able to buy during the IPO because for some reason I was not able to transact it. I started to buy a few days after the IPO. Is that a good decision? Will I still make good money from dividends even if I would buy post IPO? Thank you for your video, sir. I hope this question makes the podcast because I'm sure there are thousands of dividend investors there like me that have a good stable source of income that just wants an additional cash flow without the hustle and bustle of reading charts. Thank you, Teddy Ronald Garcia, Makati City." So there's a larger portion of people in the market that are really more investors than traders. And what I want to double down on this also, it's okay to be a long-term investor. It's okay to be a dividend investor. There's nothing wrong with that. As long as you find it something that fits you, you like dividend investing, then go for it. It's just that nowadays that trading has been placed in a pedestal, but you also have to do what works for you. You have to do you. And if dividend investing, REITs, make sense for you, then you go for it. Just for people who don't know what REITs are, I'll place videos here for the videos that we've created talking about REITs. But if there's one thing that REITs does, no, it gives you a hybrid, a proxy that rental income from buildings, hotels, commercial spaces, and everything else in between can be given back to investors. And it could be a proxy for you that if you don't have the ability to buy large pieces of buildings and earn from it, this now gives you exposure to that type of investment. So that being said also, it gives you the ability to earn via capital appreciation and in the same way dividend. So it's not just a one-side thing, Teddy, no. So when people always talk about REITs, they always say that if I buy REITs, I'm just in it for the dividends. One of the largest things on why people get into REITs, buy REITs, is the ability to earn dividends, passive income, passive cash flow for life repeatedly, and as long as the company is doing well. However, since it's traded in the market, please do remember this. Similar to what a REIT did, they made acquisitions. Those acquisitions increase the value of the REIT itself because they have more assets inside. And in the same way also, land values would increase, thereby increasing the rental rates of the building. Increasing the rental rates of the building also increases their yield, therefore also increases the dividends, but also would give a shot to people to earn via capital appreciation, as people would be willing to buy it higher given that the dividend yields would also start to increase as well. Please do note that Areit made some acquisitions already after its IPO. What do I mean by this? prior to its listing, it only owned Solaris 1, Ayala North Exchange, and McKinley Exchange, which from a fundamental point of view was very interesting because their occupancy rate was very, very high, and the leases were scheduled for an average of, if I remember it properly, at least 5 years, or to put it safe for this video, they had long-term leases. It would hurt the tenant if they would terminate it in between the lease agreement. Anyways, they also disclosed it during the IPO or prior to the IPO that they plan to buy the Teleperformance building in Cebu, which they actually did, but they acquired another building, which was the 30th commercial development in Meralco Avenue. So for those from Ortigas, I'm pretty sure you know this. There's also a mall in that particular area. So this one, it was worth 5 billion pesos for 76,000 square meters. And the thing about that is it increases Areit's portfolio assets from 170,000 to 246,000 square meters. Now, since Areit owns the building, Ayala Land would be leasing the space from Areit. So, automatic Areit would be earning off of Ayala Land, and Areit would be borrowing money to be able to fund that particular purchase. So, this deal would be done by the first quarter of 2021. Now, let's look at the dividends, the whole meat of the matter on what Teddy wanted to ask. So basically, this is how it would be structured. The IPO was at 27 pesos. So Areit already gave 3 dividends right after the IPO, and we are sitting today at the X date of the IPO. They gave 0.34 centavos, then 0.31, then the one for the December IPO, December X date was at 0.28 pesos. So if you add that all together, it's 0.93. If you're a person who bought from the IPO, 93 centavos over 27 pesos, that gives you a dividend yield of around 3.44%. But what's interesting is this, and I got this idea from Rex Mendoza, so credit to him. He said that the IPO was August. Think about it this way. It's not really a full year's worth of you holding on to it, but you are getting dividends from what Areit earned already prior to the IPO. So that's interesting. They're not giving you dividends for its performance when it got listed, but they are giving you dividends from what it actually got also prior to the listing. So totoo, 3.44% yung yield niya for the first 3 quarters of dividend disclosures. But since you bought the stock August, I'll just be very, very generous here that trying to double it because your holding period essentially was less than even 6 months. So if you did that, it would be around 6.89%. So that makes it very, very interesting. Now, the thing about that is this. For 2021, I'm assuming that the dividends would be 1.24. Just assuming that 0.93 divided by 3 then times 4, it would give you a dividend of 1.24. If they give something higher than that, then that would be a bonus. But if you bought at the IPO or you subscribe to the IPO at 1.24 dividends, you would get a dividend yield of 4.59%. Now, here's what's interesting also. Remember, if you are in it for IPOs, if you are in it for dividends, no matter what happens to the stock, if you don't sell, you're okay because you are in it for the cash flow. Remember, when you sell, you lose the opportunity already to get future dividends unless you buy it back once again. And the lower the stock price, the better it will be for you. So here's the thing. August 13, when it was listed, the stock closed at 24.33. If you bought at that date, your dividend yield would be 3.82%. And using the Rex Mendoza analogy of you are holding it for a shorter period of time, it would have been 7.64%. Now, for 2021, same principle, 1.24 dividends, and your yield would be 5.09%. So it gets higher already given the fact that you bought it at a lower price. Now, the next day, August 14, it went even lower. The stock price dropped to 23.55. Given a dividend of 0.93, that would have given your yield 3.94% or around 3.95%. You're using the Rex Mendoza principle, it's around 7.9% also if you would multiply it by 2. Same thing for 2021, assuming that it's at 1.24 pesos, your dividend yield would be 5.26. Now, the X date for August was around August 27. So if you own the stock, bought it August 26, it closed at 25.46 pesos per share. Given the same dividend, 93 centavos, 0.93, your dividend yield would have been 3.65. Using the Rex Mendoza principle, it's 7.30, given that you held it for a shorter period of time. Now, for 2021, same thing, 1.24, putting your dividend yield at 4.87%. You will see that from August 26 to November 11, the stock of Areit basically went sideways. That means also that you would not be receiving anymore the 0.34 and 0.31 dividends that was given out for those who owned the stock prior to the first X date. So that being said, your dividends would be smaller. You will be entitled only to the dividends that's given out this December. So for Areit, your dividend left is 0.28. If you bought it while it was sideways at 25.44, that was where the support is, your dividend yield would be 1.1. Using the same principle of Rex Mendoza, it would have been 2.22. And for 2021, given a 1.24 dividend, you would be getting a dividend yield of 4.87%. Now, since I mentioned that the stock was sideways, the resistance was around 25.96. Same dividend, 0.28, that would have given you a dividend yield of 1.07, and using Rex Mendoza's principle, it would have been 2.16%. Looking at it for 2021, your dividends for that is still assumed at 1.24, giving you a dividend yield of 4.77. So if you notice it also, no, from August up until November 11, the range is still pretty much the same. At least around 5.26 at its highest for 2021, and at its lowest around 4.59 if you bought it or you subscribed to the IPO. Kasi given that prior to November 11, the stock price was still lower than the IPO. Now, the stock broke out November 16, 2020, and given that the stock price was at 26.2 at the closing, using a dividend of 0.28, your dividend yield would be 1.068, which is relatively lower already, but given the time horizon from November 16 to the X date, it's just very, very short. Using the Rex Mendoza principle, it's 2.13%. For 2021, same pa rin, 1.24 assumption of dividends, your dividend yield would be 4.73%. Now, here's what's interesting. For the first time, this was around November 23, we saw Areit close higher than the IPO price of 27. We saw Areit close at 27.5. Again, the dividend still is at 0.28, giving your dividend yield for this particular price at 1%. Essentially, using Rex Mendoza's principle, it's around 2%. Now, for 2021, 1.24, your dividend yield would be 4.50. So this is the lowest already, given that the stock is already above the IPO price. Lastly, yesterday, before the X date, December 1, the stock price closed at 27.75. This is one of the highest closing prices of Areit. Dividend is 0.28. Your dividend yield is also around 1%. It barely changed. And fast forward to 2021, your dividends is at 1.24. Your dividend yield is at 4.46. So you see the principle, no? It's the higher the stock price is, the lower it would basically be. So for those who bought, here's what's interesting. For those who bought the stock prior to IPO, prior to the listing, you're slightly up right now from 27 pesos, no? So just trying to measure it from the closing yesterday, you're up around 2.9% for those who bought at the drop on the first day. This is excluding dividends. From a capital appreciation standpoint, you're up around 13+%. For those who bought at the closing on the lowest closing that we had, you're up around 17.6+%. So that's in conjunction to the dividends that you are also getting. So to answer the question of Teddy, also from a dividend standpoint, of course you want it when it's lower. So if you were able to buy after the IPO while it was sideways, while it was lower than the IPO price, then your yields would have been better. Now, the reason why I say that is since Areit is in the stock market, there will also be down days. There will be days where the candlestick will be red, and if the dividend yield by that time is something that's attractive to you, and it's something that's okay, and it's something that, given the acquisition of Cebu Teleperformance and also the property in Ortigas, and the chance that property prices will continue to go higher, forward expectation for dividends would also be better. So if that's your context, and you're buying it for what you could receive in terms of dividend growth in the future, and then it makes sense for you when you do the numbers, then you also go for it. But at the end of the day, the whole goal for this exercise is basically you decide by what the numbers are telling you. It should go back to, does the dividend yield make sense for you? And bonus na lang yung capital appreciation. After the drop that we saw last August, the two large candlesticks, it bounced well naman at August 17. But after that, it started to move sideways and consolidate up until November 11. So this was in its entire sideways range that if you were a person that wanted to accumulate, that would have been a good area also for you to start accumulating the stock. Then after that, 25.96 area level resistance, we saw the stock start to break out. Then it formed a base already. The stock right now is moving in an uptrend. The stock right now is currently on the cusp of, or in the midst of, a breakout also. Moving averages, CMF are confirming its bullishness. But that being said, it started to consolidate already with a short-term base at 27. The next resistance at 27.54 got broken. So as of now, as of the time that we're recording this video, and as of the charts that I'm showing you, there currently is no resistance. There currently also is no reversal pattern. What we do have right now are the support levels 27.5 and 27. So if should there be any correction, this is where it could possibly go back to 27.5 or to a low of 27. And if this gets broken, it could possibly retrace back to the upward trending line here, or to as low as 25.96. But rest assured, I'll update you from a technical aspect, especially in my second channel where we do a lot of stocks by request there, and we're doing a lot of the nitty-gritty analysis of the chart. So expect more value-based price action on the other channel, Stock Investing Made Easy. But for this, as of now, the support is holding and the trend is still up. So to recap, buy Areit if the dividends make sense for you. Buy Areit also if you want to strategically use support and resistance. Then that would be very, very good. That would be very, very well, because you're not just buying it when it's high, you're not just buying it also when it's falling. You have a strategy in place on what you're supposed to do. And I'll say this over and over, please do not buy a stock just because it's talked about in YouTube. You have to form your own opinion on it. You have to research, you have to do your own due diligence, you have to study, because it's your money, it's your responsibility. Not because we're just talking about it, you just buy it blindly. Not because you hear it from people and it's talked about in the news that you buy a stock. You have to study, you have to, don't be lazy, you have to be disciplined, because money that lasts for a very, very long time is something that's worked hard for, something that you research a lot on as well. So that's it. I hope I was able to answer your question, Teddy, and I hope that this is something that gave value to all of you. If you guys have questions, two ways to reach me: slide a DM via Instagram, then you can send a message also via Patreon. We also have a YouTube group community. You can just press the join button for those who want to support the channel as well. And for those who want to learn via books, I have links in the description below on how you can learn the basics of fundamentals and technicals. And I'm thinking of doing a live training course once again, maybe a classroom course for people in Makati. It will just be, or Makati/Metro Manila. It will just be a small group again, maybe this January 2021. So if you want to be part of that, let me know, put it in the comment section, or I'll try to put a sign-up sheet for those who want to join. And I guess that's it. If this video gave you value, appreciate it if you could press the like button for the YouTube algorithm, so YouTube pushes this video up. And if you just really want to support it, just comment down below, I'll go for the YouTube algorithm. So please do let me know if this video also was something that was useful, insightful, informational, and it gave you the confidence to trade the markets more, because that's all I want, and that's the whole ideology of this channel, just to give people more and more information on how they can trade the markets with confidence. So that's it for now. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.